Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, let's start off on the daily chart. We talked about daily mid-band resistance, and the bears did a good job of holding the bulls back yesterday during the regular session at the green line there. That's a 20-day simple moving average, a daily mid-band between the two standard deviation upper band and the two standard deviation lower band, which we dealt with back on the 13th, on Thursday. But when we got into Globex, you can see they gapped it a little bit up and over the top there. You can see a little better on the hourly chart here. So they gapped it over the daily mid-band, held it, and they've just been making higher high after higher high here in Globex. So you had a higher low Sunday night, basing in Globex at the weekly pivot. And then you had an entire session where, yes, this is basically your regular session here. They hopped it up, and then they held it for about 5-6 hours right underneath that daily mid-band. So it's kind of in the eye of the beholder. I say this in the room all the time when you get into situations like this. If you have a bear mentality, you're like, well, there it is right there. They're not going any further than that. I mean, you shall not pass. They are not going to take out that line. You pull out all the fucking cliches, and it's like, that's it. We're coming in just like we did back here, just like we did back here. Okay. If you're a bull, you're like, whoa, look at this. I mean, we lifted it, and now we're basing here for a lift and a launch up over the top. It's just waiting. It's biding its time. Well, somebody's going to be right and somebody's going to be wrong. In the moment, everybody's full of shit. It's just, you're talking your book. It's what you want it to be. Either it's going to convert the level or it's not. So what happened here was they hopped it, and they haven't looked back. What the bulls need to do now is they need to close above it, but absolutely without it, they have got to close above it, and I would argue they have to stay above it the rest of the week. What do the bears need to do? They need to have that not happen. A good starting point would be stop letting them make higher highs, take out the hourly mid-band, try to close below that today. Try to get back here today. And then you got to go to work now on the 20, the 9, and the weekly pivot. You are slowly seeing them dig this hole. Now, where's it headed? I don't know. Neither does anybody else. I will tell you, in looking at the daily chart, it doesn't take a rocket scientist to say, well, this last peak here where we dealt with the daily mid-band and failed, the most recent, lower high, that's going to be important. You think? So that is 38.19 to, 38.20. If the bulls continue to press, it should get up into that area. I'll be curious to see if by the time it gets there, that's going to coincide with the 50-day exponential, or maybe even the 100-day exponential, or the upper band. This diving line is the upper Bollinger Band, which right now is sitting at 38.31. So an upper band touch in that 38.20 area becomes interesting. I'm very doubtful that happens today. I mean, as I sit here at 8:20 in the morning and do this, we're up 2.17 on the day. And this goes back to the other thing I try to drill into everybody's head. Is this still bear market? Yeah. Is it still a sell rallies market? Kinda. If you close above the green line today, technically it becomes a buy dips market. And we've spent more, if we stay above the mid-band today, the daily mid-band today all day, it'll be the first time that happened since, what's this? August 19th. So soak that in for a minute. But what I was going to say was, this goes back to what we say about bear market rallies. You can be long. You can stand aside and bitch and moan about them and say that they are, this, that, or the other thing with your tinfoil hat on. What you can't do is short them and short them and short them and short them and short them. Can't do it. Can't do it. So, for example, we did 26, 27 handles yesterday in the room. We made most of it just buy in the open. Then it gets into that consolidation, and we tried a little bit of both, and we weren't getting chopped up. I mean, we were burning a little bit of commission, But when we started consistently seeing short trades give us 10 handles on our first third and then stop us out, there becomes a problem there. So what we did later in the day is we're like, look, we're just going to slap what we call a no trade zone on it. Stay out of the chop, stay out of the whip, and just let them beat the shit out of each other, and then we'll figure it out. I'm not in this right now because, I didn't trade the hop over on Globex. I don't trade Asia, and I wasn't up at 3 o'clock in the morning. So, you're not going to be in every inch of the tape, and that's okay. We'll see how this pans out in the regular session. But what I'm not going to do, unless I see some evidence of price to support it, is say, wow, we've gone up enough here. This is enough. Well, what the hell's going on? This is, we got to come in. We don't. No, we don't. Any more than we need to go up like a rocket ship anymore. Don't start making assumptions about what you see on the chart, because you will pay for it with your account. If they're going to bring it in, you'll see lower highs. You'll see price supported evidence that, you can go ahead and whatever you do, you better respect your risk. If they continue to take it to the upside, you're going to see little higher lows that are going to lift up over the top, and you can get involved in a couple of those. But pre-market, don't start making assumptions about this is what it's going to do today. I know that's what the guru prediction game is all about. And then if you get it right, you sing it from the mountaintops. And if you're wrong, well, we just forget about that one. What I would say is you have to respect this jump over the daily midband. You have to respect the fact that this is some kind of a rally after a severe down tape. And that you've got this expansion out of the box that immediately reversed and took out the top end of this range. And that, this low was based upon CPI. And what we've seen is these CPI lows that then they grind it up, and then then over time they come back. We also have we got the election coming up. You've got key earnings coming up in the next week to 10 days. There's still a lot going on. But don't start throwing darts at higher highs because you think that this is enough. Because price doesn't care what you think. It doesn't care what you want. It definitely doesn't care how you feel. Let it open up and we'll see. You got volume weighted average price and our proprietary moving average both jammed in down at 37.40, 37.41. Do those need to look off the open? Maybe. If they do and they hold, well, there's a nice look. There's a nice risk responsible look at another long. If they, and if they break down to get there, you can probably get short into those. And if they crack, then you're in a nice little short. And if none of it happens and all it wants to do is chop, well then, all the fun happened in Globex, and that's the way it goes sometimes. All right, that's all I got. This one ran a little long. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow.